Specialists here today with us. We've got Joe Rutella and Matan. How do you say your last name? Shmuel?
Shmuel, yes.
Got it, Shmuel. Two attorneys that specialize in different fields. I'll let them introduce themselves in a minute. Basically, we wanted to go over a couple topics today about some of this emergency funding that's out here, particularly for self-employed people. We'll talk about it's easier if seems to be more clear if you're W-9 employee, but what to do if you're self-employed. We're going to talk about a couple different things you may not have heard about the funding, when's it going to come back out. So let's get started. You guys just want to give maybe a brief 30-second, 60-second intro about yourselves. Start with maybe you, Matan.
Sure. Thank you. Thank you, everyone, for joining us today. My name is Matan Shmuel. I'm an attorney here in Philadelphia. I have my own firm, the Shmuel Law Group. We specialize in tax law and corporate law, mostly dealing with business owners, closely held businesses in the $1 million to $25 million range. We advise businesses on all variety of interstate taxation, federal taxation, investments, M&A activities, new lines of business, various reshuffling the deck and reorganizing businesses to be most tax optimized. I also represent the individual business owners in their private capacities with estate planning and just general business, general counsel advice.
Awesome. Thank you. How about you, Joe?
Thank you. I'm Joe Rotella. I'm the owner and founder of the Rutella Law Group. I primarily am a litigation attorney. I do business law, commercial law. I also do construction law, basically litigating contracts. I also do estate work. So that's kind of the areas of practice that I run in.
Awesome. Awesome. Thank you.
And also during this time, though, you're both helping people with all of the funding?
Yeah, I know a lot of my clientele, a lot of Matan's clientele, they're small businesses. So when this COVID-19 came up and these emergency relief acts came out, we decided to go and Matan and I work very closely together. We're of counsel to each other's firms. So when this all came up, we decided to go and take a look at the statutes for ourselves and see what's in there so that we could advise our clients on how they can apply for this relief and benefit from the different aspects of these bills that came out recently.
Right. Key thing to remember is a lot of the provisions in the CARES Act always have tax consequences. So whenever there's a tax bill on the floor, I read it and I'm typically ahead of the game on it. So we really saw an opportunity to get in front of our business clients and make sure to get them in the queue to get as much money as possible, because this is a first come, first served program. And I'm sure almost everybody on this call has already heard that as of yesterday, the program is already oversubscribed. So we're kind of just waiting for Congress to release more money to get the program back into gear.
And I think that's kind of a nice segue too, to answering questions that people might have, which is, why should I even listen to this at this point if there's no funding? Which is a very valid question. And that's because at this moment right now, in the House and Senate, they're trying to move through a bill. It's gotten caught up on some partisan snags, but given the strong sentiment around these bills, it's clear that at some point there will be a bill that passes. And at this point, those out there who are listening, you want to be as prepared as possible to be able to quickly apply for these, because as we've seen through this first round of it, the money goes very quickly. A lot of people are applying. I believe that, I'm trying to remember the numbers.
You guys referring to, just for the people who I would imagine most people are informed.
So there are two programs at the federal level that folks are eligible to apply for if they own a small business. One of them is the Paycheck or Payroll Protection Program. And this program was funded to the tune of $349 billion with maximum loans of $10 million per entity based on some requirements, which we'll get through. The other program, it was an existing program that the Small Business Administration runs called the Economic Injury Disaster Loan. And this loan is actually meant to help businesses kind of in the face of natural disasters, typically used for hurricane relief and for tornado relief and earthquake relief, flooding, like Hurricane Katrina, Hurricane Sandy, to name a few. But that program existed, and late March, around maybe the 20th of March or so, federal government tried to use this program and add additional funding to it to give businesses relief. And they realized quickly that there just wasn't enough money. I think they allocated something like $10 billion to it, and just wasn't nearly enough. But by March 27th, they rolled out the payroll protection program with $359 billion. And as we see, even that was not enough.
Yeah, that went quick. I mean, it was like less than 2 weeks, right? I think it was, we applied for ours.
I think if you didn't have an application in within the first 3 days of funding, you didn't get your money.
Crazy enough, by the way, I was just telling Joe before we got on here, we just heard back yesterday that we got ours got approved through TD Bank, our payroll thing.
That's great news. That's really great news.
Kind of shocked.
And I mean, I've talked to attorneys out there that some of them, they're not getting this, and they're going to have to close down their practices temporarily, but they have to close them down because they just don't have the cash flow to keep them up. And so it's unfortunate, but that's the reality that's happening out there. And why some of these programs are really necessary. And that's why we know that they're going to get refunded, because you just can't take that big of a hit in your economy.
Right.
So what are some things that like people have to do? Like right now, there's not much you can do because a lot of the banks have shut down their websites. Obviously, they're not taking applications, but like I'm guessing there's probably people out there who missed the boat. What should they be doing to get ready for when the next round of funding comes out? Sure.
Let's talk about it in two tranches. Let's talk about the Economic Injury Disaster Loan first, because this is a short form application available on the SBA website. If you go to the SBA.gov website, they have a section for COVID-19 relief, and businesses can apply either by themselves or have their accountant or an attorney or another advisor help them with the application. But the parameters of that program are that businesses would be given a loan guaranteed by the SBA at a rate of 1% annually, and that would be a 2-year loan. And those loans can be up to $2 million. Those are based on operating cash flows. It seems to be that the formula used is gross revenue less cost of goods sold divided by 12. So you get a monthly amount, and then they give you 2.5 times your monthly amount. That seems to be the amount, even though that's not in any statute. That's kind of the formula that some practitioners have backdoor calculated based on funding given to clients. So it's really kind of piggybacking off of the same formula of the payroll protection program, but it's not tethering it to your payroll. So, but one interesting thing about that program is that the CARES Act, which is the relief bill passed by Congress, authorized any applicant to an EIDL, Economic Injury Disaster Loan, would be given a $10,000 grant within 3 days of applying. And there's an electing box on the application where you select that you want to receive a $10,000 grant. Because the funding has been so severely restricted, the SBA has taken upon itself, with or without the authority of Congress, to limit those grants. And they appear to be limiting those grants to up to $10,000 and basing it on $1,000 per employee that you have on your payroll. So if you're a sole practitioner and you don't have any employees and you sign up for the EIDL expecting a $10,000 grant, you're probably only going to get $1,000.
Now, do you know anybody who's actually gotten any funds so far from this?
Yes.
Okay.
People who've applied early,
Yeah.
yes. And people are getting, I'm seeing a lot of folks who have, let's say, 10 employees getting $10,000 grants and then being offered a $15,000 loan on top of it through the EIDL. The loans are kind of nominal. I think folks anticipated actually taking significant loans through this program, which has a really favorable interest rate, and using it to pay off some existing debt to keep the business floating. And businesses are really disappointed by what they're getting out of the SBA through the EIDL program.
Yeah, I mean, if you're getting $1,000 per employee, I mean, that's going to cover them for, if you have someone making $40,000, $45,000, $50,000 a year, that's covering for like a week.
Yeah. So with respect to that, I do recognize that the EIDL program was probably not the right disaster relief program for a nationwide shutdown, right? It really is a funded program that has sort of a level of funding that exists for dealing with isolated disasters like an earthquake in LA or a hurricane in Houston. But when the whole country is applying all at once, you know, the funding gets spread thin. And so that's why Congress rolled out the PPP, the Payroll Protection Program, in an attempt to really persuade business owners to choose that program as sort of a bridge loan rather than to go through the EIDL, although it has less favorable terms in some ways.
And part of the problem with the bill is this: the legislature did not focus the bill to assist the areas that are being the most affected by the COVID-19. So like New York, Pennsylvania, now Florida, California, Oregon. These are the states that have the highest levels of the virus and that have implemented shutdowns that are really affecting their economies. So, you know, if you're in Iowa or Idaho, I mean, they're naturally always in social distancing and isolation because their state populations are so small, and they're not being hit. But at the same point, the businesses there can apply for these programs the same as all the businesses in New York. So right. You have a lot of people accessing the money who really don't need the money during this time because they're not in shutdown. Or it's just there's problems with the bill itself, but those systemic things we can't really change. We can just tell you how you can best prepare to quickly try to get in line the next time the money's released.
Yeah.
So let me ask you real quick, Joe, because I want to jump over for a second to talking about, like, say you're because I know we want to cover on this call, if you're self-employed. I'm going to start talking about that. What do you do? I feel like that's where the most confusion is. Like, you know, if you're a realtor and you're self-employed, you don't have employees. Like, what are you going to apply for? Are you filing for unemployment? How does that work?
Well, here's a couple things. Well, with the PPP, if it reopens up, it depends on how you're structured. All small businesses will be able, or self-employed persons will be able to access it because they're probably, they have a Schedule C. They normally have an LLC that's a pass-through. They haven't elected to be taxed as an S-Corp. And I will just say as a caveat, this is Matan's area way beyond mine as far as the tax stuff goes. Yeah. So pop in whenever you want.
Why don't I pop in with a brief summary of the PPP program, because we didn't quite get to that yet, right? Mm-hmm. But the PPP program is basically designed to give loans to small businesses to cover 8 weeks of payroll. Okay, under the terms of this program, banks that have relationships with the SBA and are approved SBA lenders. So these are the commercial banks, and that's the major American banks as well as local community banks that do SBA loans. And now we're seeing PayPal get into this, and a couple other, like Rocket Mortgage and other lenders who make SBA loans, who already had those SBA pre-approvals, have pivoted to a new product. The fundamentals of the program are that the banks will lend you up to 2.5 times your average monthly payroll costs for your employees, with a couple other formulaic additives in there to kind of boost that number up. And so long as the funds are used to maintain your payroll at a ratio of at least 75% of the funds has to be used to maintain your existing payroll prior to March 20th, 2020. And the remaining 25% can be used on mortgage interest and utilities and rent. Then if you abide by that formula, all of the PPP loan money will be treated as a grant, subject to the individual business owner applying for loan forgiveness, which that application period opens up after June 30th. And in that application period, although we don't have any regulations out about what's needed to substantiate your claim, we would expect businesses to have to submit payroll records, quarterly payroll records, to show that the money was used for that, and to show bank stubs or pay stubs that money was used to rent and utilities. So the fundamentals of the program are: you calculate your annualized payroll per employee, and any employees over $100,000, you're going to cap their annual pay as if you only paid them $100,000. Okay? Then you're going to divide that number by 12 to get your average monthly payroll. You're going to add to that number any employer incurred costs related to employee expenses, which include the employer's portion of employee health care spend, paid leave, vacation time, retirement benefits. So that all gets added back after you get the average monthly amount. And then that number is multiplied by 2.5. So it actually can become robust for an employer that has, 10 or more employees, and gives them significant benefits.
Good to know. I think when we did ours, I don't think I added in all of I'm not sure if I added in our employer's portion of the taxes, and it was so fast. Like, right. I was trying to get it in the first hour that we found out about it.
And, I know the mentality of a lot of small business owners and people who are adverse to debt. And one of the concerns a lot of people have here is, okay, I'm applying for this money, but I don't really want a loan, right? I'm interested in applying this because I expect it to be forgiven. So our mentality, Joe and I have advised some clients who are so adverse to debt that you can always borrow less than you're entitled to. And if you use it for the intended purpose, you're going to be certain that you're going to get debt forgiveness on all of it. But if you borrow more, as much as you're entitled to, and you don't maintain the same level of payroll, you might find that some of the debt does not get forgiven. But if it doesn't get forgiven, it just converts into a loan that can be repaid up to 30 years. It's a little bit unclear what the conversion terms will be, and that might vary bank to bank.
And that's another good point with a 1% interest loan. I mean, that's almost where banks are borrowing at.
Right.
When the interest rates were normal about 15 years ago. I mean, it's so low that's it's essentially free money, as some people say. One of the things that, going back to, if you're an individual, a self-employed individual, a lot of people, especially when they heard that the tax filings were going to be extended out until June, they've decided to, as many people do, procrastinate, and they have not gotten their tax information together. So when they go to file for these programs, and they require 2019 numbers or 2019 Schedule Cs to show your individual income from your business. And one of the things I don't think we touched on is when Matan was speaking earlier about the calculation of your payroll, if you are a self-employed person, what you do is you take your net income for your business for 2019, and that's going to be divided by 12 to create an average monthly income. And then that's times by the 2.5. Okay.
Okay.
So if you're trying to apply for these and you need to show your income, that's going to be supported by that 1040, the Schedule C on your 1040. And a lot of people haven't put that together. So what do? You know, if you have relatively stable income from year to year and you're able to predict what it is, and you know that your 2018 numbers were similar to your 2019 numbers, or if you know that your 2019 numbers are higher than your 2018 numbers, then you could probably use your 2018 information as an approximate. Like Matan was talking about, you can always take less and it's not going to hit you down the line. The problem is if you start taking more, and then that can end up converting over to the loan. So that's what we've been looking at with people that have come to us and said, hey, Joe, hey, Matan, you know, I didn't do my numbers for 2019 yet. My accountant has all the paperwork. He's putting it together. We tell them, look, the best we can do is go off those 2018 numbers, if that's safe to do. And the caveat being that—
just to recap, so you're saying you're taking your net income. So say if you haven't filed your taxes for 2019, you're self-employed, you're taking your gross, deducting expenses, taking the net, then you're using that to find the monthly income.
Yes,
that's what you're putting on the application.
Your individual monthly income. Now,
Okay.
here's the thing:
that net has to be capped. That net is capped at 100,000.
Got it.
Yes, just like a regular employee.
Right. And this doesn't apply to S corporation owners or LLCs that file as an S corp, because the S corporation owner has a officer's compensation on the 1120S, and that is treated for tax purposes as the employment compensation related to the officer's activities, because an S corporation owner's compensation is bifurcated into two parts. There's a portion of their compensation that relates to the activities that they provided to the S corporation as an employee, and there's the compensation related to the capital that the S corporation owner invested in the corporation. So the employee portion, you pay payroll taxes on that, and for federal tax purposes, that's being treated as payroll. And so that's going to be the owner's payroll. And I know that a lot of S corp owners typically like to depress the amount of officers' compensation because it reduces the additional payroll taxes that they pay. So it's kind of a double-edged sword, but you have to go by the numbers that you presented in 2019.
So just in case that went over, because had I not only just recently spoken to our accountant about that, that would have just went over my head. What questions does someone need to be asking their accountant? It sounds like if I have an LLC that I'm taking my money through, is that filing as an S corp?
Yeah.
And then
I think it's pretty simple. Okay. Everybody has a copy of their tax return. At the very top of the return, it'll say 1040 on it. If you had a business and your business filed a separate tax return, that'll say either 1120, 1120S, or 1065 on the top. Okay. If you have an 1120S, you're an S corporation, and on the first, second page of the return, and I say that because sometimes your accountant puts like a payment voucher on the first page, but on the first page of the actual return, it'll have a line item for officers' compensation. That's going to be your payroll for purposes of this program if you have an 1120S.
Okay.
You have a 1040 without an 1120S, then you're going to go to Schedule C of your 1040. It's going to be like the 10th page in the return. And on that, at the bottom, it'll say net income. And that net income number, if it's less than $100,000, you're going to divide that by 12. If it's more than $100,000, you're going to take the number 100,000 and you're going to divide that by 12, and you're going to get like $8,300 something dollars.
Okay. And now, so say if someone is not filing, because the second example you just gave with the 1040, that's someone who's not using they're not using S corp to pass their money through, right?
Mm-hmm.
All right, got it. So I think that's clear enough.
So now here's another thing. Look, if you're like me, see, I'm a self-employed person, and my LLC is an S corp. I can't go out there and I won't get any benefit out of a PPP. If you are in that situation and you are not working, you can and you should be able to apply to. And I'll give a caveat, go and look this up. It goes state by state, so you'll have to look up the Pennsylvania guidelines on it. But you should be able to apply for unemployment. You can simply fire yourself. Because because you are an employee of the corporation, you can technically now fire yourself and lay yourself off and try to collect unemployment, in which that itself has expanded to allow for self-employed individuals. Those are people who are like independent contractors, people who are sole proprietors without a business entity, people who have an LLC that's not an S corp. You know, it's those individuals out there that if they're not making income, they can now apply to unemployment insurance. And the way that you apply to that, if you're looking for it, is it's applied through the Pennsylvania website, which I can provide to Stephanie or Rodney, and maybe they can get it out to everybody. And there's an online application there. And you just fill it out. Don't call them up to see if you're eligible. They actually say right on the site, do not call us to check your eligibility. Just apply.
And do you just get it if you apply? Or?
Well, no, I mean, they'll check your eligibility. They just don't want you wasting their time by calling in, or else they'll field a million calls of people asking if they're eligible.
So something like 22 million people went on unemployment in the last 3 weeks. So, so I think state unemployment agencies are understaffed and overworked at the moment, which is probably why they don't want you to call. But I will tell you this, historically with unemployment, if you don't get the money, the week you applied for it, when you do get paid, they will pay you and activate your unemployment back to the date that you filed for it. So it may take you a month to get the money. Again, I believe that all of these programs will be appropriately funded. It's really become a matter of, can you get money in time to save your business, right? Because I think that they are going to correct the underfunding problem of the EIDL and the PPP. It just may not happen till mid-May.
Or later.
And some businesses, I recognize, just are going to have to go into hibernation mode or do something to try to make it through that stretch. And even so, unfortunately, I think that a lot of businesses, this money may not be enough to get them through these really difficult times.
So you guys have any thoughts on, because I was talking with Joe before this call, I'd seen a Facebook post from a real estate agent last night. They're saying if this is just an example, if your income's sporadic, you're self-employed, take selling houses, if you don't have any closing, let's say you have one closing lined up in the next month, they were saying your closings in 2 weeks from now, you're taking unemployment checks for the weeks that you don't have closings, and you're not taking it for the week that you do. You're not cashing it the week you do have closings. I've never even had to think about unemployment. I don't even know how it works. Do you have any thoughts on what to do in that case?
So under normal unemployment, I do recall, and it's been a while, I'll warn everybody, since I've looked at unemployment law. But if I recall, they require you to periodically report to them whether or not you've worked,
Okay.
or whether or not you've been searching for new employment. And so you have to show them that you've taken certain steps. You can't just always just sit back and collect. So what I'm probably going to assume that is there's probably some provision in there for self-employed people, because there are people that get sporadic income. For instance, take an attorney. Let's say that an attorney went on to unemployment, and then all of a sudden they had a guy come in and with some minor small case. I mean, so they turn it away, but they might have to report that. I don't know the guidelines. I'm sure that there's guidelines being issued and put out for it, but I have not personally read them or gone through them. So,
So
I wish I could give a more satisfactory answer, but maybe Matan can.
yeah, I might be a bit of a contrarian here, but I look at underlying policy intentions of both programs, right? The CARES Act had basically 3 sections. One was, a major industry bailout. We're talking about airlines and cruise ships and hotels and things like that. And then there was a provision relating to the Payroll Protection Program. And then there was a third provision for unemployment, right? I think the Payroll Protection Program and the unemployment provisions are 2 sides of the same coin. So Congress said, we recognize that a lot of workers are going to be on unemployment, and we want to make sure that we can get them robust unemployment benefits to help them basically live. But Congress also realized that, laid off workers may not return to work. And so the Payroll Protection Program was designed to give business owners the funding to really keep their employees on the payroll, on the job, so that they wouldn't be filing for unemployment, and they would have some job stability for when this all ends. Maybe short-sighted of Congress that they thought 8 weeks was sufficient, but maybe not. We don't know when the country is going to reopen. But I think trying to thread the needle and apply for the PPP and apply for unemployment is kind of a perversion of the intent of the statute. It doesn't mean that it's illegal, because, again, I'm not the expert on state unemployment and now federal unemployment provisions. But I will tell you that if your income is a little bit choppy, and it's not that smooth, like if you're a realtor or an independent contractor and you have a lot of 1099 income, I mean, you're a candidate for the Payroll Protection Program. If you can hold on, if you have enough money in your bank account to get your groceries for the next few weeks, I mean, I have to believe that Congress, in days, if not weeks, is going to have to authorize an additional spend on the Payroll Protection Program. And I think that's where your independent contractors should be focusing their relief efforts.
And the U.S. people better have their paperwork together, because I remember we had to get all of our payroll statements since like the beginning of last year. I mean, it was a huge. You have to have it all together, all your tax, all the tax stuff, and you have to submit it in a short period of time before, if it's an online application, before it times out. So
and this brings us to another piece of this, which is when it comes time to apply for the forgiveness, you're going to want to make sure that if you do get this PPP money, that you're putting it into an account that you can trace everything. What we've been telling our clients is, if you get this money, take it and put it into its very own bank account. You contact your payroll company. If you have a payroll company, if you do your own payroll, then you just do this yourself. And you cut the checks directly out of that account. Why? The money's not commingled with other company money. If you're out there buying other things, if you're a small business, a lot of small businesses use the owners use you shouldn't do this, but they use their business account almost like a personal account. And then when they go and do their taxes, they go through and they just pull out the expenses that were the things that they paid for themselves, and they make it a distribution. But the real reasons why you shouldn't do it is it really muddies the water, and then people get tempted down the line when they're doing their taxes to write things off, which really shouldn't be written off. And really keeping clean accounts makes things a lot easier. And that's the point here is you want this money to be as easily traceable. You don't want to make it hard for the banks to figure out whether or not you use the money appropriately, because the easier it is for them, the easier to make their job, the faster, more likely they're going to give you the forgiveness. So we've been advising people, take that money, stow it away, pay your employees out of it, pay yourself out of it if you're incorporated into that money. And then when it comes time to do forgiveness, all you have to do is pull those bank statements and boom, you have all the proof that you need.
Quick follow-up question on that. Like, I know for our TD app, I already had to put in the main business account that we use to have the fund deposited to. I don't know if I'll be able to change that. I mean, and this is kind of splitting hairs here, but do you think even if it goes into your main account and then you transfer it into a separate one that you just create that day, I mean, you think it's worth going through all that, or maybe
it depends what kind of expenses you have. A bank statement, you can pull your bank statement, and if you can demonstrably show what the funds were used for, you shouldn't have a problem if you commingle it in your business operating account. It doesn't take a lot to open another bank account, particularly when you have the banking relationship with TD Bank. You could just tell the lender, you know what, open me another side account, and they will, and you can directly deposit the funds into that. I recommend it. I think Joe made a great point. We have been advising our clients. It's just going to be cleaner. And, you know, the regs aren't written yet that discuss how to substantiate what amount gets forgiven. And I expect them to be tough, because
I'm sure.
I think that there's a lot more time to write those regs, right? And I think that this program was designed to be generous and indiscriminate on the disposition of funds, meaning, you know, there probably is a significant amount of fraud and abuse of people going after the funds. And banks are going to be on the hook for the amounts that the SBA doesn't forgive. And the banks are going to be on the hook for very low interest loans. So banks are going to scrutinize these businesses' applications for loan forgiveness because they're banks, and it's their business to do that.
Okay, great point.
This might be a nice time to transition, because I'm looking at the time. If people want to know about the extension to the FMLA Act, or the FMLA, Family Medical Leave Act.
Please, before we wrap up,
Yeah. So
first of all,
now,
what is the FMLA Act?
I'm just about to get into that. So the FMLA is the Family Medical Leave Act. So this is a federal act that requires employers of a certain size to provide medical leave and to preserve people's positions if they have to go out and treat or deal with family members who've gotten sick or in the hospital, they're terminally ill. Now, I'm not going to get into the actual provisions of the FMLA. That's outside the scope of what I'm really looking at. What we're looking at are the new emergency provisions for folks due to this COVID-19, because it provides things that normally the FMLA doesn't. For instance, paid leave. FMLA says that you have to give the person leave and you can't fire them, but doesn't necessarily say that you have to pay them. Under this emergency FMLA, what they've done is they've tacked on a new category of when you can get family medical leave. And that is if you're being affected by the COVID-19 or a family member. Now, give me 1 second. The first thing we want to look at is, are you a covered employer? Are you an employer that's going to be under the act? And this is for people who might have businesses and are asking themselves that are out there listening. Or if you're an employee, you might be wondering, does my company have to follow this? Are they part of this act? Well, it's all companies that have less than 500 employees, which is a lot of companies out there. Now, if you're an employer out there saying, look, I don't have that many employees, so if I give leave, it's going to kill me. There's an exception. There's a couple exemptions to this. One, if you're a healthcare company or an EMS, then you have the ability to opt out of it. That's one. The other exemption is if it's going to cause a catastrophe for your business, then you don't have to, then you can be exempted from it. And here's the thing with the exemption, it's not like you file anything with the Federal Wage and Labor. You just simply tell the people, you write them a letter saying that we're exempted from this because it would be disastrous to the business. And so we can't comply with this. But you're going to want to keep very detailed records. And if that's what you're going to do, if you're going to say that, then you're going to want to actually make sure you have the proof to show that this individual, if they go out, it's going to kill the business or really be detrimental to the business.
Do you mean
Because
like
down
the
the
business
line
has to pay them while they're not there?
Yeah,
Okay.
exactly. Like, and for instance, let's say that you have a person who has a particular specialty in that you can't replace them, and they go out and you still have to pay them under the act, that you're going to have to close shop, or that it's economically unfeasible. You're going to want to be able to muster whatever proofs that you have, put them together in a file and keep them. Because if down the line that person reports you to Wage and Labor, you're going to have an issue.
Right.
And you're going to need to bring those up and say, look, I did everything by the book. I did everything in good faith. I didn't do anything wrong here. I'm exempted from this.
Okay.
And so you like with anything, as we've been stressing, you always want to make sure that you have your ducks in the line. You want to make sure that you have your paperwork ready. Now,
I would just add, Joe, that I know that small business owners hate hearing that they should go speak to a lawyer. And I know that it's a bit hypocritical of me as a lawyer who makes money from people speaking to him as a lawyer. When an employee is seeking an entitlement that they believe they have a right to under law, these are very fact and circumstance specific. And you can get yourself in a lot of hot water if you make a mistake. And so these are the kind of things where if you have an employee who may be planning to go on FMLA, you really should talk to an expert in employment law, which full disclosure, that's not me. But
and I'll also tell you that's not me either. I've gotten up to speed on this particular portion of the statute in order to answer some questions for clients. However, I do have people who are experts in this area that I work with regularly that I'd be happy to refer anybody over to. So if anybody if there's any employers out there that find themselves in a situation where they think that they would like to discuss this with an attorney, they can reach out to me, and I can certainly get them in touch with an attorney that they can
Awesome.
deal with.
And before we wrap up, can you give the employee perspective?
That's what I'm getting to. So how do I know if I qualify for getting this? Well, under the Act, you qualify if you have to leave work for the following reasons. Now, I want to stress something with what work is considered now. If you are at home, working from home, they're calling it telework now, you're still considered working. These are for people who are still working, but they actually have to stop working, either from home or from an office. To give an example of the type of person that we're talking about, let's say you work for an essential industry. Cardboard boxes are considered essential industries right now. I know that because I have a client that works in there. And their employees have to come in and they have to keep cranking them out in order to fill demand for necessary supplies that have to be shipped. So let's say that they have a person that works in there on the machines, on the die cutter. And that person can't come into work because they have nobody to look after their kid. That is a reason to go onto FMLA, to access this. That's the type of person we're looking at. We're not looking at a person who works for a bank and the bank said you can't come into the office, you have to work from home. That's not going to apply to them. So here are the reasons. There are basically 6 reasons that come up in which you can access these funds. The first one is if you're subject to federal, state, or local quarantine. The second reason is if you've been advised by a healthcare provider to self-quarantine. The third reason is if you're experiencing COVID-19 symptoms and you're seeking a medical diagnosis. The fourth reason is if you're caring for an individual who is subject to one of these orders from a state or local quarantine, the federal, state, or local quarantine, or from a self-quarantine. Number five is if you're caring for a child whose school or place of care is closed, or care provider is unavailable for reasons related to COVID-19. And that's important. I'll get back to that and break that down a little bit more. And then the sixth is you're experiencing any other substantially similar condition specified by the Secretary of Health and Human Services, blah, 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 blah. It's a catch-all, that last part. The important thing that a lot of people are going to care about is caring for a child whose school or place of care is closed. And what's important to know about this, it does not have to be a formal place. If grandma was the child's primary caretaker during the day when you worked, and grandma says, I can't have granddaughter or grandson over here because I'm high risk and they could make me sick, that is the same thing as your daycare closing. And if you can't work because of that, now you can access the FMLA. Now, here's the thing. Depending on the reason why you leave, it can change the duration that you're allowed to leave. So basically for reasons 1 through 4 and 6, everything but 5, you have 80 hours of leave. Now, if you have a part-time employee, or if you are a part-time employee, then what the time is the number of hours that you normally work in an average 2-week period. So if that person works 25 hours a week, then it's 50 hours. If they work 15 hours a week, it's 30 hours, et cetera, et cetera, et cetera. Now, what if you have a person that works sporadically? You know, they might work 5 days this week, they might work 1 day the next, they might work 3 days. Then what you do is you take their average for the last 6 months and you average that out. And that will give you your hours. Well, what if they haven't worked for 6 months? Well, that's also been dealt with. If that's the case, then you'd use your a reasonable estimation of what their average is. And again, if you're doing that, make sure that you have some way of documenting it. I would just take all the weeks that they've worked for you up to then and maybe average it out. Or maybe you cut the outliers out. Let's say 1 week you worked 6 days a week and next the person worked 1 day a week. You cut those outliers out and then you average it like you would be doing in statistics for a standard curve.
So let me ask you real quick. So let's say you have someone who's in this situation and they are working for an employer who cannot afford to pay them. Forgetting about the hours for a second. Mm-hmm. And because I didn't realize that if you're sick with the virus, you know, that's covered as part of this. So if someone got sick and had to stay home and fell under this and their employer couldn't pay, how would they get paid for these hours?
Well, then they'd likely have to go on unemployment.
Okay, so
yeah.
So
okay. Now there's also
New Jersey and New York and some other states have paid family leave, which is basically an insurance policy that's kind of attached to your unemployment insurance.
Got it.
So I don't think Pennsylvania has paid family leave, but
so this is more though for essential workers.
Well, it's going to, just by the very nature of how things are panning out, it's going to probably apply more to essential workers. Because look, if you're working in a restaurant, I mean, right. The only way it would work is if your restaurant is allowed to do curbside service. And give me a second. Okay, my phone's telling me that it's dying. So,
so Rodney, I think what the takeaway is that the FMLA is not meant to make sure you get paid. right? It's
Right.
it's meant to
Mhm.
make sure you don't lose your job in the event you get
Exactly.
coronavirus or your child or dependent gets coronavirus.
Okay.
You
However,
get fired for.
it does have provisions in there for payment. Now, if you leave because of childcare, you get up to 12 weeks of that leave time. Now, the employer has to pay for 10 of those. The first 2 weeks they don't have to pay for. Now, you can opt to take them as PTO or whatever benefit that your work has, but the employer's only on the hook for 10 weeks. Now, what does the employer have to pay? They pay 2/3 of your of your average salary. Now, that actually has a cap to it of $200 a day up to $10,000. Now, that does not mean that your employer will cap it at that. They have the ability to cap it at that. And that's not a whole ton of money over 12 weeks.
Yeah, I mean,
So
$1,000 a week.
you're less than $1,000 a week, about
Right, with
$800
the
a
cap,
week.
I guess.
Yeah.
So,
But
So-
if you're worried about going on unemployment and then not having a job to return to, FMLA may be an option for you.
Yeah.
The unemployment is probably more generous than the FMLA, but you
Oh,
run
yeah.
the risk of A, are you eligible for unemployment because were you fired? And B, you may not have a job when you try to come back.
But by the way, you don't get unemployment because you were fired. If you're fired with cause, that is not grounds for unemployment.
Yeah.
If you have to be laid off or fired because of something you didn't do, or if you can voluntarily leave a job if under certain circumstances, if the employer does not give you something which you were promised, if the employer is making you do a task that's substantially different from which you were hired. Those are reasons that you can voluntarily leave, in Pennsylvania at least, and be able to collect unemployment. But so for the employers out there, one of the things that you might want to know is if you do pay employees under the FMLA, it is dollar for dollar a tax credit when you do your taxes next year for 2020. So if you paid the person $30,000 while they were out, you can get a tax credit for $30,000. And that's one thing that's an incentive as part of this program, because the legislature wants employers to pay employees who are out because they're sick.
We lost Joe, I think. There he is.
Yeah.
But Rodney, why don't we field just a few? Were there any questions? Should we field a few questions?
Let's check it out. I actually don't think we have any questions in the chat here. Let me look on Facebook. And then I was going to say
no questions on Facebook either.
What was that?
No questions on Facebook either.
Okay, cool. So I'm sure a lot of people will be watching this later. Where can before I ask where you guys contact and finish that point, if it's a tax credit for an employer, it's essentially like free. We can talk about
Yes.
this.
No, that's exactly right. That's
Right?
the intent. The intent is to relieve the burden on the employers, right? All of this was designed to make sure people can survive the coming weeks. So as you see with the unemployment and the PPP, it's all designed to take the burden off the employer of keeping the people on the payroll.
Got it.
And even, we didn't discuss this, but with the economic injury disaster loan, if you don't take the PPP, you're able to get a employee payroll retention tax credit as well for up to 50% of your payroll, up to an amount equal to $10,000. So but you're not eligible for that if you get the EIDL grant of $10,000, because there are triggering mechanisms, much like with these $1,200 stimulus checks that everybody got. If you were eligible for a stimulus check according to your 2020 tax return, and you didn't get it in the mail, then you will get a credit for it on your 2020 taxes.
Right.
So all of this is designed to be as fair as possible with the information we have today, because we have incomplete information.
And they're trying to encourage employers who can pay to continue to pay and not take the federal money in order for that money to be better used towards people who can't.
Right.
They, so that's really what those things are geared towards.
Awesome. So where can we reach you guys if people have questions or want further explanation or need consultations?
Sure. 24/7 at www.shmuellaw.com.
Can you spell that?
Yeah, it's SHMUELLAW.com. My office is downtown. I'm working remotely from home until Philly opens back up, but we can Zoom, we can Skype, we can Google Hangout, we can get your problem solved.
Awesome.
And I can be reached at my email's Joe, Joe, at Rutella, that's RUTALA.com. My name on the bottom there is spelled wrong. I don't know if I did that, but just make sure that's clear. It's RUTALA.
Not Joe Ruta.
Yeah, it's not Joe Ruta. Or you can contact me directly in my office at 215-360-3696, or sorry, 3969. And you can call me anytime. My number's routed directly to my home office. So if you have any questions, please feel free to contact me. And if you want any sources to be directed to, I'd be happy to direct you to those too.
And we can direct anybody to them as well.
Yeah. Well, thank you for those of you who are watching. Thanks for tuning in, and thank both of you for giving your time today. It's much, much appreciated. I'm looking forward to doing more of these calls over the next couple of
Thank you.
No problem.
Be safe, everybody. Take care.
See you guys. Take care.